The world of digital money is heating up, with excitement and uncertainty swirling as new technologies and ideas reshape how we think about value. In recent months, we've seen a big jump in the cryptocurrency market, with investors and institutions alike paying close attention. Bitcoin broke through $120,000, almost hitting its all-time high, attracting both old and new investors who are eager to be part of this financial revolution. Ethereum also jumped, getting close to its previous price peak, and showing that the momentum isn't limited to just one digital currency. This shows that the technology behind financial apps, digital art, and blockchain is really good, and it's evolving faster than ever before. This increase isn't just about numbers. It's because of big changes in politics, money, and companies, all coming together at the same time. From the White House to company boardrooms, a new story is forming. Crypto is now seen as a real part of the global money system, not just a passing trend. This rally is driven by big forces that are changing how we see money, how we use it, and even how we save for the future. We'll talk about the main reasons for this huge rally, factors that go far beyond simple price speculation. The pro-crypto policies from the Trump administration have played a major role, signaling a shift in how governments view digital assets. There's also the chance to invest retirement money in Bitcoin, opening up new opportunities for millions of Americans to diversify their savings. And what the Federal Reserve is doing, its policies and decisions, are having a huge impact on the entire financial landscape. Changes in rules are letting millions of Americans put money into Bitcoin through their retirement savings, making crypto more mainstream than ever. Also, big companies adding digital money to their balance sheets is making things even stronger, as corporate adoption signals long-term confidence. This is a big moment that shows a huge shift towards a digital money age, where technology and finance are more connected than ever before. Let's break down what makes this moment different from before, and why the world is watching so closely. This is the story behind the big jump in the crypto world, a story of innovation, change, and the dawn of a new era for digital money. One of the main reasons for the crypto rally came from the White House. The Trump administration took a pro-crypto stance, turning unclear rules into a real boost for the industry. This political support made investors more confident, opening the way for the market to grow. Before, mixed signals from the government made crypto innovation and investment tough. Now, with direct support from the president and his close advisors, rules are starting to loosen up. Tom Essay from Sevens Report Research says that the government is really pushing Bitcoin. Public support from people like Eric Trump makes it seem even more that crypto is now part of the country's money plans. The psychological effect is big. More people are brave enough to enter the market. Crypto is no longer a small issue. It's now a main part of the money strategy. This political momentum lowers the risk from rules, bringing in big company money. The government's pro-crypto stance is a main reason for today's bullish market. The most important step from the Trump administration was an executive order that fundamentally changed the landscape of retirement investing in America. This order opened up new chances to invest in crypto through 401k retirement plans, something that was previously off-limits for most Americans. For decades, 401ks were limited to traditional assets like stocks and bonds. Now, for the first time, Bitcoin and other cryptocurrencies can be an option for retirement savers. With trillions of dollars sitting in 401k accounts nationwide, even a small allocation, just 1 or 2%, into crypto could mean hundreds of billions of dollars flowing into the digital asset market. This influx of capital could have a huge impact on the growth and stability of the crypto sector. This isn't about short-term speculation or risky bets. It's about giving people a new, long-term investment option that could help diversify their portfolios and potentially make the overall market more stable over time. By allowing crypto in retirement plans, this executive order gives digital assets a level of official approval they've never had before. It's a major shift, changing how crypto is viewed, from a fringe, risky asset to a legitimate investment choice for everyday Americans. Millions of people who were previously unsure or hesitant now have a straightforward way to access the crypto market through their retirement accounts, making it easier than ever to get involved. Of course, the process is still new. There are important questions about regulations, investor protections, and how these investments will be managed that still need to be answered. But the direction of the policy is clear. The government is signaling that it wants people to have the freedom to choose digital assets as part of their financial future. This policy is a main reason for the high optimism and excitement in the crypto world right now. The opportunity for millions of people to start using crypto in their retirement plans is becoming more real and accessible every day. This is a huge step forward in bringing crypto into mainstream finance, and it could shape the future of investing for generations to come. The Trump administration also shaped crypto's future by making smart appointments, like Stephen Moran, to the Federal Reserve Board of Governors. Moran is known for supporting a weak dollar policy, which historically helps assets like gold and Bitcoin. A weak dollar makes investors look for safety in assets that don't have a lot of supply. Bitcoin becomes a top choice. Moran being at the Fed could lead to policies that are more friendly to the crypto industry. This opens up chances for good rules and recognizing digital assets as a permanent part of the money system. Moran's nomination sends a strong signal to the market. The government is serious about its pro-crypto plan. Investors see this as lowering long-term risk from central bank policies. The Fed might start seeing Bitcoin not as a threat, but as something that helps the money system. A change in how a big institution like the Fed thinks is a big reason for market optimism. This makes crypto stronger in the future of the global economy. The expectation that the Federal Reserve will cut interest rates is a main reason for the crypto rally. Low interest rates make borrowing cheap, which encourages investing in risky assets like crypto. Savings and bonds become less appealing, so investors look for higher returns. Money flows into Bitcoin and other digital assets as a way to protect against rising prices and loose money policies. The Fed puts a lot of money into the financial system, and much of that money is now going into crypto. Investors are getting ready early, expecting a flood of cheap money. Not just crypto, but the stock market is also jumping, driven by expectations of easy money policies. Bitcoin is a main winner from these big economic trends. An easy money environment makes digital assets more attractive. This is why crypto prices keep going up as the Fed's policies change. Right now, the crypto market is being fueled by a unique combination of economic forces, a perfect storm that's setting the stage for rapid growth and opportunity. These conditions don't come around often, and when they do, they can create powerful momentum for new investment trends. The economy is showing strong signs of growth, but at the same time, the Fed is still signaling that it may cut interest rates soon. This is unusual, because rate cuts are typically used to boost a weak economy, not one that's already expanding. This rare situation is especially good for assets that are sensitive to how much money is available in the system, like cryptocurrencies. When money is easy to borrow and invest, these assets often see big gains. The economy is growing steadily, unemployment is low, and businesses are thriving. People are feeling confident about their jobs and spending more, which helps keep the economy strong. Normally, when the economy is this strong, interest rates would be rising to keep things in check. But right now, it's the opposite. Rates are staying low, or even falling. That means there's a lot of money available for borrowing. The risk of not getting paid back is lower, and it's easier for both businesses and individuals to get loans and invest. As a result, money is flowing freely into riskier assets, including stocks and especially crypto, as investors search for higher returns. At the same time, inflation remains high, which means the value of cash sitting in the bank is slowly eroding. People are looking for ways to protect their savings from losing value. Bitcoin, with its limited supply and built-in scarcity, is seen by many as a smart choice to hedge against inflation and preserve wealth. The combination of strong economic growth, low interest rates, and persistent inflation creates a compelling reason for people to move their money into crypto assets. Investors everywhere are searching for both protection and growth, and digital assets are quickly becoming a top choice for those goals. All of these factors together are what's driving the massive crypto rally we're seeing right now, and why so many are paying close attention to this space. This crypto rally is also driven by big companies changing their strategies. Public companies are now adding Bitcoin and Ethereum to their balance sheets. Before, only a few pioneers did this, but now it's a big movement in the corporate world. Bitcoin is chosen as a way to store value and protect against rising prices, replacing cash that loses its buying power. Ethereum gives access to the DeFi, NFT, and Web3 worlds. These investments aren't just experiments, but long-term strategies. Every company purchase sends a strong signal to the market, encouraging other companies to join in. Company demand reduces the supply of coins in the market, pushing prices up. Company adoption creates a good feedback loop, making the rally stronger. The mix of institutional demand and limited supply is a main reason for price increases. This is one reason why the crypto rally continues. New investments from the traditional financial world are coming in because of the spot Bitcoin ETF. ETFs let investors buy Bitcoin through the stock market without having to store the asset themselves. This product makes it easy for millions of people to access the crypto market. ETFs attract billions of new dollars, creating constant buying pressure in the market. Every ETF purchase means the fund manager buys physical Bitcoin, directly affecting the price. The simplicity of ETFs connects the traditional financial world and digital assets. The success of the Bitcoin ETF makes the market stronger, absorbs selling pressure, and pushes prices to new highs. Now, the market is waiting for the launch of a spot Ethereum ETF, which is already boosting ETH's performance. ETFs make crypto a mainstream investment product. The flow of money through ETFs is a main pillar of today's bullish market. Crypto is now easier to access and widely accepted. The jump in Bitcoin and Ethereum isn't just a short-term event, but shows a big change in the global financial system. This rally is supported by a mix of political forces, big economic trends, and changes in how investors and companies think. Pro-crypto policies like Bitcoin in 401(k)s give it a lot of official approval and amazing new demand. The chance of interest rate cuts and a growing economy create a good environment for digital assets. Investors are looking for returns and protection against rising prices in a world of easy money policies. Company adoption and the success of ETFs make crypto stronger in mainstream finance. The group of investors is now growing from early users to companies and retirement savers. Political power, institutional adoption, and economic conditions will keep shaping the market in the future. The crypto world is becoming more mature, marking the start of a new chapter for the digital economy. This isn't the end of the story, but the beginning of a more open and digital financial era.